I'm welcoming Sean Hanlon, the CEO and founder of two RIAs, Hanlon Investment Management and Vestbridge Advisors. And Sean, you've been in the financial services business since 1983, so you've seen a lot over that time. How did you maintain success over all of those decades?
Well, I think to be successful in the financial services business and wealth management, it really takes 5 important things. Number 1, you have to have a passion for helping people. Number 2, you better have a plan. Number 3, you better care about everything that you do. You also better have a high ethical standard, and then do the best you can one day at a time.
Yeah. What trends have you seen, I'm sure you've seen several, that have created changes to your business, maybe led to you operating differently?
Sure, yeah. So the industry has not changed at all, in that clients still expect good risk-adjusted net after-tax investment results. But it's also changed a tremendous amount in that clients are subjected to constantly seeing the value of their portfolios, all sorts of different investment products, the speed and the breadth of all the information. And so, you know, it's gotten a little bit more challenging, I think, for investors.
No, I remember my dad looking at the paper, like at where the stocks closed, you know, in the newspaper, which is crazy now to think about that. How have those changes impacted investing?
Well, it's made it a little bit tougher, I think, for folks in that they are seeing the values of their portfolios, and they could freak out a little bit more.
Anxiety.
That's right, as compared to, you mentioned your dad. Your dad checked the paper to look at stock values, and perhaps your dad was a retiree who got a check a month and had a wonderful retirement. Today's retirees have to be quasi-portfolio managers themselves, although they should get a good wealth manager, and experience potentially 20–30% ups and downs in their portfolio. In the old days, they didn't see that. They got a check a month and everything was good. So that's a little bit tough because part of the population can't handle that.
Yeah. And have those been good for investors? Because you think more information equals better, but maybe that is not the case necessarily.
Well, it's not the case in some instances, and in other instances it is. For example, it's always wise for everybody to have a good financial plan, and through technology we're able to update the plan in real time. So if the market's down, like it's been lately, 20%, we could show the client, hey, you know what, over the long haul, this may not really be that impactful. Or, for example, in real time, a client could say, hey, I'm interested in retiring a little bit early. We're interested in buying a boat, a vacation home. What does that mean to our financial plan? And in real time, because of technology, we can update it instantly and show them the results.
Now, Hanlon Investment Management was your original firm, but you've recently launched Vestbridge Advisors. So explain the difference and why did you launch that second entity?
Sure. Yeah, so Hanlon started as a direct-to-client wealth management firm. We were very successful, and other advisors started referring their clients to us for us to manage the client portfolio. The advisor would still retain the relationship, the financial planning, all the communication, but we did the actual money management. And so, so as to not confuse in the marketplace, have any confusion in the marketplace, we changed our business such that we developed another firm called Vestbridge Advisors so that we could go direct to clients and offer our wealth management services, and that's why we have the two businesses. One business services advisors that refer clients to us, and the other business, Vestbridge Advisors, goes direct to clients and provides wealth management. But both businesses use the same middle and back office services to open accounts, service accounts, trade accounts, etc.
Yeah, and we were chatting a little bit before. You were a graduate of Stevens in Hoboken, and you're on the board of trustees, right?
Yes.
So, and you also have the Hanlon Financial Systems Center there as well. That focuses on STEM studies, right, for the students there. I mean, explain that, and what's that connection for you?
Yeah, sure. So one of my passions is giving back, and so my wife Kathy and I are the benefactors to the Hanlon Financial Systems Center, which was founded in 2012. And its purpose is to provide facilities and an environment for teaching, for research, and for partnerships with the private sector. And our vision was that technology and financial services were going to become more and more together. And like we like to say, it's a shame we were so wrong. And also the center recently helped Stevens get the first ever award from the National Science Foundation in FinTech for an industry university research center cooperative.
Oh, interesting.
So it's very, very exciting.
Yeah. What, in your opinion, makes a good financial advisor?
Well, a good financial advisor should be able to help a client, number one, establish a good asset allocation and have a plan. Number two, help them in rebalancing their portfolio at the right times. Number three, be able to manage the costs and the taxes. Those are some of the things we can control. Costs meaning steer the client away from expensive products, make sure that they're prudently priced, and then taxes, making sure that the client gets to keep most of what they earn, if not all of what they earn, and also invest the assets in the right type of account, as well as good distribution strategies when you're taking money out of your retirement accounts, all that sort of stuff. And this has been proven time and time again, and a very large financial services firm commissioned a study, and that's exactly what they found was the value a wealth manager can deliver. Yeah.
And before we go, I want to ask you about inflation, because that has been a huge topic all year. I mean, how do you kind of navigate the inflationary environment with your clients?
Sure. Yeah, inflation is number one around the globe right now. Of course, we have some challenging hotspots around the globe like Ukraine, et cetera, and other tough things, but inflation's number one. And yesterday, the Federal Reserve raised rates another 0.75%. And the future, the next meeting, November 2nd, they're probably going to raise 0.75% again. So they're fighting inflation, but I think what everybody needs to realize, and this is what a good wealth manager should be telling their clients, 3 years ago, 5 years ago, 6 years ago, we were fighting deflation. And those mega trends are still in place, namely the demographic trends, technology, reducing the cost of things, as well as high debt around the world. All those things provide for lower economic growth and therefore lower inflation. So, but inflation itself has some good sides to it. You know, banks have made loans on properties. The properties are up in value, so the bank's loan is more protected. Also, our government debt, which we all worry about, as a ratio to GDP, gets a little bit more attractive because GDP is going up. Nominal GDP is going up a lot because of inflation. And then lastly, the 60/40 stock bond portfolio, which has been pronounced dead by the financial media, is back and alive and well because interest rates are back up to decent levels, and of course recently stocks have come down to decent levels. So things look pretty good for the 60/40 balanced portfolio.
Yeah, no, interesting. Yeah, and some people are kind of freaking out about all these interest rate increases, but I'm like, we came from zero, so
that's right.
You know, that's one thing to keep in mind. But Sean, thank you so much for coming in. It was great to hear about you and your success.
Thank you very much.
Thanks.